What if we reframed your life as a company? Let's call it You Incorporated. And today, we're going to conduct a full, cold, hard audit to see what the numbers really say about your bottom line.
And yeah, this is the headline number. Right out of the gate, the current valuation of You Inc. is negative $1 million. Now hang on. This has absolutely nothing to do with the money in your bank account. This is about the value of your future potential, your energy, your health, your time. And from a business perspective, it is deep in the red.
So what is this asset we're even talking about? Well, it's you. It's everything you could possibly become. And every single day you spend stuck in a burnout cycle, you're not just getting by. No, you are actively liquidating that asset. You're selling off your future piece by piece for the short-term cash flow of today's paycheck. And let me tell you, from a financial perspective, that is a terrible, terrible deal.
So to really get our heads around that shocking negative $1 million number, we have to do something radical. We have to stop thinking about burnout with our feelings and start analyzing it like a straight-up financial crisis, because that's what it is. This is a crisis in the company of you, and it needs a clear-eyed diagnosis, not just, a long weekend to try and recharge.
To really understand this crisis, we first have to define our core currency. So think about your time, your focus, your physical and mental health. All of that together is your energy capital. It's the only real money that You Incorporated has to spend. And the scariest part, you only have a limited amount of it. It's finite. Now, when you invest that capital well, it pays you back. It pays you what we're going to call growth dividends. What are those? Well, they're things like new skills you pick up, a bigger and better network, or just that incredible sense of fulfillment. These are the returns that actually build your future value.
And here's the difference, plain and simple. A good investment, it builds you up. It makes you more valuable over time. A bad one, well, it just eats your capital for lunch and leaves you with absolutely nothing to show for it. When you are spending way more energy capital than you're getting back in growth dividends, you are, by definition, heading straight for bankruptcy. And it's so important to get this. This has zero to do with the salary you're earning.
So the big question is, how do you even measure this? How can you tell if you're just having a rough patch or if the company of you is truly about to go under? Well, let's look at a tool that can actually put a hard number on whether your career is a losing investment.
But first, a really quick question about focus. So many of us, we obsess over these tiny, visible costs, don't we? We beat ourselves up for buying a $5 coffee. But at the exact same time, we are completely ignoring this massive, invisible liability in the room, the cost of being on the wrong path, a cost that is quietly draining millions from our future value.
Okay, this is called the Quotient. Think of it like a report card for your career, and it measures 3 really key things. First, drive. That's your motivation. Second, fit. How will you actually align with the role? And third, growth. What are you really learning? And as you can see in this example, a score this low puts you squarely in the danger zone, the red zone.
And what's so powerful about this is just how direct the advice is. This isn't about a feeling, it's not a suggestion, it is a data-driven fire alarm. The warning is totally unambiguous. A score of 15 or less means it's time for a major, major change, and fast. So, here's the most important point. Staying in a red zone job isn't about being tough or grinding it out. From a cold, hard financial perspective, it's like holding on to a stock that is plummeting, just hoping it'll magically recover. That is not a strategy. That's just a bad investment that gets worse every single day you hold it.
So what happens when we finally realize we're in a hole? What's the most common reaction? We try to dig our way out with pure, brute force. We think we can hustle our way back to profitability. But this is exactly where things go from being bad to absolutely catastrophic. And this is the hustle trap in action. First, you start working insane hours. Then you try to be everywhere at once. You start telling yourself this really dangerous story that all this pain is somehow an investment, that it's building equity. But it's not. All you're really doing is pouring more of your precious, finite energy capital into an asset that is failing.
And eventually the market always corrects. Always. You can't outwork a bad strategy. The market, and in this case, the market is your own body and your own mind, it will deliver a correction. And as you can see here, it is always, always brutal.
You see, the crash, it isn't really about running out of energy. The real problem is you've run out of solvency. The cost of just operating has become so high and the return so laughably low that the entire system just freezes up. You weren't just tired,
you are insolvent. You're basically trying to bail out the Titanic with a teaspoon.
So how in the world do you recover from total insolvency? You can't just work harder. That's what got you into this mess. No, what you need is a complete corporate restructuring. And that starts with a big change in leadership. It is time for a hostile takeover of you, Inc.
And the very first step is something called identity shedding. Basically, you have to be willing to let go of the identity that led you into bankruptcy in the first place. This quote just says it all, doesn't it? You can't wait for things to be perfect to change. You just have to change. Spring just shows up.
And here are the two identities you can choose from. On one side, you've got the intern. It's a depreciating asset, constantly running on praise from other people, always waiting for permission. And on the other side, the CEO, an appreciating asset, driven by an internal mission, taking decisive action. To save the company, you have to fire the intern and promote the CEO immediately.
So where does this new CEO get their power? From their why, their intrinsic motivation. This isn't about some external goal like a promotion or a raise anymore. It's about tapping into what truly, deeply drives you. Because when you operate from that place of meaning, the work itself stops feeling like a cost. It becomes the reward. And that, my friends, is the most profitable state you can possibly be in.
Okay, so you've changed the leadership, you've found your core mission. Let's move to the final piece of the puzzle. How do we build on this? How do we create a sustainable, profitable future for you Incorporated?
Concrete. Imagine a network of 10 people. Now, if you add just one more person to that group, you don't just add one unit of value, you create 10 brand new connections, a pathway to every single person already there. The value doesn't add, it multiplies. The potential for collaboration, for support, for new ideas, it just explodes.
And this is how you apply it to your own personal turnaround. You absolutely cannot do this alone. The most successful people, they get this. They actually borrow other people's nervous systems. Think about that. They find mentors, friends, partners who are calm when they feel anxious. They literally plug into that stability, and all of a sudden, that external calm becomes a core asset on your personal balance sheet. This is the only compound interest that truly matters.
So at the end of the day, the path out of burnout, it's not about more hustle. It's not another productivity hack. It's about a fundamentally better business model for your life. It's about firing that old permission-seeking management and installing a new leader, a CEO guided by a real mission and powered by a strong, stable network. So the final question is pretty simple. Are you ready to make the change?